Hi, this is Mark with my analysis for the rest of the week. This is the 11th of May. Now I prefer to trade from longer time frames, but what I'm going to show you today is a mixture of weekly, daily and 4-hour charts. I prefer the weekly, if at all possible, because you can catch big moves. This move on the Aussie dollar yen that I called this back in October, November time, I believe, went 1100 and odd pips. The recent move went 800 and odd pips. If you can make one trade a month and make a serious amount of money, then I don't feel the need to be going down to certainly 1-hour charts. I don't go down to anything less than a 4-hour. But I know some of you like to trade intraday. So let's take a look at a number of pairs and potential trades and a very interesting head and shoulders pattern on one of the pairs. So this is the same pair, Aussie dollar yen, still looking to trade from weekly. And this is the area for me once again now. Now remember, we're moving down this trend line, so I am looking anywhere around 85.50 for a potential short on this pair. What gives me added confidence with this is we've now had this 55 EMA weekly crossing over a monthly 200. Everything's rolling over here, everything is pointing down, and therefore that for me is the main area to enter for a potential big trade. And for me, I would be placing my stop up here. Now, some of you freak you out, 140 pips, dear me, you don't want to go all that way. You could be more aggressive and go just behind an EMA or even just behind the trend line. But if I'm risking 130 pips, I only risk the same amount of money, I just reduce my stake. But what I'm looking for is to gain 800. And therefore I'm looking at potential win ratio of over 1 to 5. Therefore it is a very good potential trade. Conversely, this is the New Zealand dollar, and it's messy on a weekly. Yes, it's bouncing off some trend lines, but some horrible nasty spikes, and therefore I would leave this alone on a weekly. However, on a daily, we had an M2 breakout yesterday. So we've had a move down, we've broken outside a major channel that goes back to the beginning of the year. The candlesticks came down, we've had this pattern here, and price has come up this morning and touched to the pip the line, and therefore I am interested to short this pair. If that fails, I will be looking for a break and close above here again for a pullback with a view to a long. USD Singapore dollar, showing you for weeks and weeks. This is a weekly chart. We were in a triangle. We were waiting for a break of a triangle. We kept getting fake outs down here, but we then got a break and close of last week. It's now moved up. So for this, for an M2, you're looking for a pullback anywhere around 135.50 for a long on this pair, and that is slightly my bias on this pair is to long. However, it has to get back down there, and at the moment it's bounced off this weekly 55 EMA. Let's have a look at the daily. Now here on the daily, I've placed an order on this demo account, and the reason why I'm in here or looking to get in here is we have got a shed load of things going on, so we're looking at multiple reasons always for trades. And here in this area here, we have got confluence of the weekly 55 EMA, 78.6 fib, previous support and resistance. In other words, there are multiple reasons why price is struggling here at the moment. Now I missed the entry here. I have now placed an order on here, and I have my stop up here 80 odd pips away. Again, a big stop, but I am looking for a potential gain down here of 400 pips, and therefore once again the risk reward ratio is excellent. If this breaks and closes above all of this, then I start to think in terms of a long and a move back up. Aussie dollar on a weekly, last week price broke out opposite direction, opposite pattern to what I've just shown you on the USD Singapore dollar, but this is significant. This is a triangle breakout. And the theory behind a triangle breakout is that price will break out. So it's 300 pips the size of the triangle. And the theory is you'd get a 300 pip move, which we're almost there now. Well, we have actually got down here. So what are you doing with this? Well, I'm looking on a weekly chart here. I'm looking for a pullback anywhere around 75.50, 60 area for a short. Alternatively, if it just keeps hovering around, then for the start of next week, we're going to be looking at this area here for a potential pullback and back down again. But that longer term is where I am interested to short. Euro at the moment is a mess. We had this line in place a few weeks ago when price was down here. I explained why I was shorting here. I think it was 1,450 I'd said, and it went 250 pips, which was great. Then we had this nasty spike the week before, and at this moment in time, complete indecision. However, the Eurozone are printing billions of euros a week to buy their own debt. They cannot allow the euro to get stronger, and therefore I am only looking to short this pair. This is main area here. The real area is up here around 117. Look what happened a few weeks back. Price got all the way up there and was promptly forced back down again. So that for me is the major area. I'm not interested down here. It's just too choppy. This is one of great interest. This is the euro pound on a daily chart, and notice how we have a conventional head and shoulders pattern here, and I'm going to explain to you now a head and shoulders pattern and the theory behind it. You have the head, you have the left shoulder, you have the right shoulder. The theory goes, we also have the neckline. So the theory goes with the head and shoulders pattern, if we get a break of this area here, which also happens to be a main area of previous support and resistance, what you look for is a breakout pullback with a view to a short. And the theory goes, you measure from the head to the neckline, which is approximately 330, 340 pips, middle figure, and that should be reflected in the move down, which will take you, this is a major area of previous support resistance, 74, 60, 50 area. So we could be on for a decent move down here. One caveat, at the time of recording this video, tomorrow is Super Thursday as far as the pound goes. There is a ton of news coming out for the British pound, including interest rates decision. And Carney, the master spin doctor, he's just not very good at it. One week he talks about interest rates going up. He's now been talking this week about interest rates going down. Nobody expects it tomorrow. If it does happen tomorrow, then the euro will surge upwards. So what we would do in this instance, you will wait for a finish of tomorrow's news, let the dust settle, but this is a very tempting pattern and it does repeat, and this is classic, this is textbook head and shoulders. Now if you're trading intraday, another option for you is this same pair. Got 79.30 here on a 4-hour chart. 79.30 going back recent weeks has been a major area, and it's anywhere between 79.30 and 79.50. But look, came up and rejected, came up and rejected, finally broke through, came back down, resistance became support, broke back down, support became resistance. So if you were only trading one pair, you had multiple opportunities on this one to make a profitable trade. So if you're trading it intraday, be watching 79.30 to 79.50 for a potential move back down. Pound, New Zealand dollar. Major news tomorrow, as I just mentioned, on the British pound, so wait for that to come out. But on a 4-hour chart, this is an area of confluence. You've got your fibs, you've got an intersection of a trend line, you've got previous support and resistance, and therefore this is the area. If it breaks and closes down here, you know what to do. You look for a pullback with a short. If it goes up and back down again, then you look for a long. That is the main area, and that's what you want to get into the habit of, is looking at major areas of support and resistance. Technical trading is all about support and resistance, whether it be trend lines, Fibonacci, EMAs, etc., etc. Have a good day.